And then I think we could see the markets roll over. I think if the stock market starts to struggle here, which I think it's going to, we're going to see gold have another leg higher and push up to potentially $3,750 per ounce potentially. So the next few weeks are going to be really volatile in the stock market. And I think we're going to go up and try and test those all-time highs. There's a lot of nervousness in the market. If stocks start to fall down, start to struggle even more, people are going to move to gold as flock to safety. And, that's where people tend to go just before we have a big financial crisis. We saw this in 2008.
The current financial landscape reflects a weakening U.S. dollar, surging gold prices, and a stock market that, while currently strong, faces potential risks. Chris Vermeulen, The Technical Traders, shares in-depth chart analysis and technical indicators, suggesting major moves in the price of gold and silver, possibly pushing gold up to $3,750 and silver near $38. The U.S. dollar has experienced its weakest start to a year on record, declining by 8.8% on the ICE U.S. dollar index and falling below 99. This downturn is attributed to investor concerns over trade policies and potential tax measures, including a proposed revenge tax on foreign investors. Analysts suggest the dollar may be entering a prolonged period of weakness, reminiscent of the 2002 to 2008 downturn. After trading in a confined range for several weeks, the price of gold soared in June. Gold hit a nearly one-month high as geopolitical concerns and economic uncertainty fueled investor demand for safe haven assets. Despite the dollar's decline and rising gold prices, the stock market has shown resilience. The S&P 500 has rebounded strongly, with projections suggesting it could reach 6,200 even if 10-year Treasury yields hit 5%. Something interesting by comparing today's market to what happened back in 2007 and 2008. Back then, the stock market hit a new high, only to drop by around 20%, while gold initially mainly moved sideways. Then, as stocks topped out and the real estate bubble peaked, gold took off and became the top-performing asset. He says that we're seeing a very similar pattern right now. We're about to explore the video, but first, be sure to subscribe and click the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
We're definitely seeing the dollar index here. This is the daily chart. It's kind of gone off a precipitous waterfall. It's sold off. Now this is the daily chart, and it keeps finding a little bit of a bid and a bounce, but it's fading down. I think the monthly chart is a pretty interesting and scary looking chart for the dollar when we look at it.
Oof.
Obviously, it has got some pretty wild price action, kind of a broadening formation of higher highs and lower lows, showing a lot of uncertainty, and it really just has sold off. And right now it is like clinging on, trying to hold the lows from this year. And potentially if this breaks, it could actually extend and have a pretty big drop, which could fuel, obviously gold, as you just said, Craig. We could see falling dollar could send gold sharply higher. And so that's the big question. Can the dollar get traction? You know, there's a really interesting comparison chart. I'm not sure if you and I have talked about this or showed this yet, but the left chart here is the 2006, 2007, and 2008. This is the market top of the S&P 500. The candlestick chart is the S&P 500. Fundamental and economic, financial kind of standpoint, it's a very different market than 2008. But price action always does the same thing. It's either going up with fear of missing out and people greed, or it's selling off because people are fear of losing more money. So price is either going up or down. It doesn't matter what the news is, but price generally kind of repeats similar price actions. And what's interesting here is we had a high in 2007. The market put in a nominal new high, and then it ended up selling off, and it had about a 20% pullback as that first crack to the downside. And as the stock market was topping in 2008, it had already gone sideways for about a year and a half. And that was gold more or less traded sideways in that bullish pattern. That was when stocks took off, real estate took off. Bubbles, it felt like they were everywhere and everybody was a hero making tons of money. Yet just in the final few months of the stock market starting to push to new highs, gold joined in on the rally, and then gold shot higher and became the number one top performer, and everybody wanted gold. And, it's interesting, if I was to pull up the dollar index on here, take a look. If we drop the dollar index on here, the green line, the dollar was down at the bottom. Nobody wanted it. Everybody said the dollar was going to implode, the whole fiat currency scenario. Nobody wanted it. And so if we fast forward to where we are today, we have a very similar type of price action. We have a high on the chart right here, draw. We have a nominal new high. We did see the stock market have a 20% correction. Now we're bouncing up, but just similar to this double bottom and this move sideways. We're having a strong bounce right now. And of course, we have gold trading up. Gold has surged and taken off right as the U.S. stock market was just hitting new all-time highs. Gold's been leading the way. And then if we look at the dollar's in the lower right-hand side again, obviously way off those highs. And it's hated. Everybody hates the dollar. Everybody's fearful that it's going to fall just like previous. So this is a really interesting comparison. Scratch out, what's going on with banking system in 2008 and the housing crisis. If you just look at it as price and emotions are the same. Price is going up or down. People are either fearful of losing money or they want to make money. And so when you look at the charts, it really does take the news out of things. And that's why I love technical analysis, because I can look at it through the lens of what are people doing with their money? Where are they moving it? Pulling it out of the dollar, going into gold, getting out of stocks, or chasing high-tech stocks or growth stocks. And what's interesting right now is we actually have a lot of people moving into high growth stocks, like the ARK ETFs, uranium stocks. There's a whole bunch of different pockets. Uranium's got a little more news to it, but a lot of aggressive stocks. And that's what happens near major market tops. People move into the aggressive stuff thinking we're going a whole lot higher. Meanwhile, it's potentially the end is near for a big market correction. So, if I was to fast forward, what happens with in 2008, obviously the stock market fell 57%. Gold pulled down naturally with it about 34%. It ended up finding a bottom way before the stock market did. And then, of course, gold eventually took off and shot higher. So I believe we're going to go into something similar, whereas the price of the stock market is eventually going to roll over. I think gold will eventually get pulled down with the bear market and the forced liquidation margin calls. And then I think we'll see it take off and start another major super cycle to the upside. But I think those two comparisons are really interesting because the charts are very similar. They're not identical, but they sure have the same characteristics and the same feeling as the last major market top, the last stage 4, just before we went into a stage 4 bear market.
Silver has soared to the key milestone of $35 per ounce, reaching its highest level in more than 13 years, propelled by robust industrial demand and ongoing supply deficits. Known both as a safe haven asset and a vital industrial metal, silver has surged 24% so far in 2025. Silver is facing its 5th consecutive year of a structural market deficit, although the deficit is expected to narrow by 21% in 2025, according to the Silver Institute. The gold-silver ratio, which reflects the number of ounces of silver required to purchase an ounce of gold, currently stands at around 94, down from 105 in April, when it reached its highest level since May 2020. Silver has considerable room to move higher, and quickly. He pointed out that silver has been showing a powerful chart pattern. After a big rally recently, it has now formed what's called a bull flag, which is typically a sign that more upside is to come.
I think silver's got quite a bit of upside. Obviously, it can move so quickly, but it has a very strong chart pattern. Obviously, it's had a big run up. It's put in a big bull flag pattern. Over the last week and a half, 2 weeks, we've been talking about how it's pushed up into resistance, into these highs, and it's held its ground in a very tight range. That is a very bullish chart pattern. Using Fibonacci extension, there's a couple different targets we could pull off of this. The most conservative target is not using the spike low where it was a washout kind of panic in the market, but to use at least 2 bars, this red bar and where another bar crosses. And same with the upside and the downside here. This gives us a conservative target. So the first target is the golden ratio, which is 618. This is the most probable target that it'll hit. This is generally a spot if I'm trading something like this, any discretionary trade. This is where I always sell some of my, it's usually a very good sign that we're going to see it go up to this 36.42, which is another pretty good move from where we are, just from where we are. And that shows we should go up to about $38 per ounce, which would be a very strong pop. 10% move from where we are. And if we just kind of go way back in time here, we can see where that matches. We go way, way back here. That is one weird looking chart.
That's the way back machine there, brother.
Oh yeah, this is going way back there. So here's the weekly chart. This is a little cleaner. Obviously, we're going to potentially hit this target around 38. I'll just draw a line across here. And that brings us right up into this massive blow off top and the hiccup and kind of into this previous high. So there's no doubt if it gets up there, it's probably going to get rejected very, very quickly and sold back down. In fact, we've seen that just in these recent pushes to the upside right over here. You see very strong push and it gets slammed down, a strong push up to another high gets slammed, another push up, it gets slammed. So this is the characteristic we're in. If it was to hit 38, that would be like I'd probably close out my position, because not only does it suit what has been happening in this chart already, but it is a really major level where momentum's going to run out.
Yeah.
Probably be a big bout of selling. You could pick it up probably, a week or two later at a much lower price. So
Yeah.
I'm still bullish on both of these. And seasonality wise, if we just look at gold, typically June, July, August is when kind of gold, starts to bottom out. Or just trade sideways. So we will be going into potentially summer type of push higher as the stock market stalls out over the next month or so. Gold could, take that lead and want to push higher as well.
The current financial landscape shows a weakening U.S. dollar, rising gold and silver prices, and a stock market that remains strong but may face risks ahead. The dollar has experienced its worst start to the year in history, declining due to concerns over trade policies and new hacks proposals, while gold has surged as investors seek safety amid global uncertainty. This trend mirrors what happened in 2007 and 2008, when the stock market peaked and fell while precious metals soared, hinting that history might be repeating itself. Is 2025 shaping up to be a repeat of the 2008 financial crisis? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.